streaming, when Netflix is creating its own product and then just putting it on this platform, there is no license fee to obtain after that, right? Because they're just creating the content and then putting it on their platform, and they are earning their revenue from subscription fees. So I'm paying, let's say, $20 a month for Netflix. How do you allocate that $20 a month to the shows that I watched,
If you'd like to earn CPE credit for listening to this episode, visit earmarkcpe.com. Download the app, take a short quiz, and get your CPE certificate. Continuing education has never been so easy. And now, on to the episode. Hello, everyone, and welcome back to the show. I'm Blake Oliver, CPA, and joining me today is Kendale King, CPA. Kendale, welcome to the show.
Thank you for inviting me.
Kendale has demonstrated strong aptitude and an interest in accounting from a very young age. He obtained his associate's degree while still in high school, then continued his education by simultaneously earning his master's degree and CPA. Kendale kickstarted his career at Deloitte, where he audited major companies. Seeking more fulfilling work, he transitioned into media and entertainment accounting. He held roles serving prominent clients at a consulting firm and also worked at Netflix. This experience enabled Kendale to ultimately launch his own practice, specializing in media production and crypto assets. And I'm really eager to talk to you today, Kendale, about your practice and your background. So yeah, great to have you. I guess for my first question, I got to say, what was your favorite, what's been your favorite gig in the entertainment industry so far?
Man, I mean, just hearing it back like that sounds interesting. I'm like, man, I did all that, huh? I think that my favorite gig, in the actual, entertainment space, because Netflix was a dream job for me at the time because, obviously I watched Netflix and I'm just like, oh, I want to, be there and everything. But honestly, I'm a guy that really needs a challenge and needs to be stimulated. And Netflix was real, together. They had already had all their stuff together, so it didn't really lead me to be able to do much at the time. And so I guess my favorite, oh man, it's hard to pick a favorite. I'm gonna pick a couple. Let me do
Okay.
that. I think I worked at a consulting firm where I was able to, when Disney was buying Fox, they couldn't get all of the sports networks because Fox Sports Networks, and then Disney already had ESPN. So they weren't able to get those. So we had to do a separation of those, networks and create financial statements for them from scratch. And they had never had financial statements before. So it was I think 15 different entities that we needed to create them for so that investors could use it. And I feel like that was just real cool to me because I had literally just got out of doing auditing, and auditing financial statements, forever. And then it's oh, now you got to make them up from scratch with some things that never had it before. More times than not, you have Sally, right? You can use things from last year, but this we had to do it from scratch, and it was a really interesting experience there. Working.
Wow, yeah, that does sound fascinating.
Yeah, it was cool because we had to do them each standalone and then all of them combined. So we had to do different versions of them. The one thing I didn't care for is that with all of the 10Ks and stuff like that, they get real nitpicky on the wording. I'm like, all right, that you can miss me on that stuff. But the putting together the numbers and making it happen was pretty cool. And then one thing is you see this pillow right here in my background. It's a logo of a convention that I work with. I handle all of the finances, and it's a convention called DreamCon, and it's really a big piece of my heart, honestly. Since I started working with them back in 2021, it literally is a entertainment convention focused on the anime, gaming, media, just content creators, all of it. And it was really something, and it's really focused as well on the black, group, especially because, more times than not in different places, they dress up as somebody else's favorite character, they kind of get ridiculed and everything. And so it was creating a space where you could feel like yourself. And I'm a huge comic book fan, as you can see with the the things over here. But so it was really great. It was really
So
great to
describe
be
for
able.
our listeners what you have in the background there.
Oh, yes. Yes. So, like I mentioned, this is the a pillow logo for DreamCon. That is a crown because my last name is King. That is a money sign. That is an actual money tree. And then, I have some movies here, some of my favorite movies. Huge Will Smith fan, so a lot of those up there are probably Will Smith. And then I have some of these bobblehead. What do you call these things? Pops. Yeah, these. I got that one actually from Netflix. That's
Mm.
from Stranger Things. And then just some of my influences. So Star Wars and Avatar: The Last Airbender. I love Mickey Mouse, from a young age. Black Panther. So it's just kind of, I'm still adding to it, but it's like a representation of kind of obviously the money side and everything like that, but also the media and the gaming, the TV, all the stuff that I love.
So tell me about Deloitte. Like, what was it like to work at Deloitte? Are you one of the people who says like it was a great experience? I'm so glad I did it. Or is the Big Four all it's cracked up to be?
I mean, I don't really get in the habit of bad mouthing anything, but I will say, obviously, we all know what corporate America is. I enjoyed my time at Deloitte, but by the time I was leaving, I was happy to go, if that makes sense.
Hmm.
And it was more so on the line of, I really wanted to do more, and like Deloitte had a plan for you. It's like you do, and again, just Big Four in general. You do 2 years here, then you become a senior, then you do another 2 3 years, you become a manager, another 2 to 3 years, and like they really wanted you to stay in that box. And it's like for me, I'm just like, how do I get to this? Any place I come into, I look at the top, and I'm looking like, all right, how can I get up there? What's the best way, fastest way, most rewarding way I can get to the top? And with Deloitte, and again, Big Four in general, it was just like, oh, well, you do this, and sure, there are some times when people maybe can skip, or do a little something a little early, but that's not really what we want. We want you to, spend as much time and get the blah blah blah. And I'm just like, no, I'm good. I don't want that. Like, give me what I need. I want to move. I was real ambitious, and so um, it was good to learn a lot of like basics, a lot of soft skills, how to manage, kind of difficult conversations, how to deal with, people who were, you know, um, in a position that they feel like they were being attacked, and so how to communicate properly. And so it was just a lot of different skills that I've learned, and so I'm definitely grateful for the years I was there. But like I said, by the time I left, I was I really wasn't looking back.
Hmm. So you left for media and entertainment and moved all the way across the country, about as far as you can get, to LA. Is that right? Like, how did you make that leap? How did you make that
It is.
transition? Not just physical distance, but also like going from audit to entertainment. That's a big shift.
It is, it is. But for me, I was already setting myself up to make the change. Because I was even like within Deloitte, I had did a like very, very small stint on like the NBC audit that they had at the time. And I was
Mm.
like, and being very intentional on setting myself up to be able to get into the entertainment industry that way. And honestly, I was actually going to go to New York first. My the partner on the engagement at the time, had pulled some strings to be able to get me into the NBC audit, because it was like one that was in Los Angeles and it was one that was in New York, and I wanted the one in LA, but that was already pulled, but he was able to pull some strings for New York, and so I was like, okay, well, I didn't really want to go to New York per se, but it is still a place where it was like media, entertainment, all that stuff like that, and so I was like, all right, let me work within the confines that I have. But then a manager at the time, a really great guy, that I, worked with, he was like, Kendale, you don't have to work for Deloitte, right? He was like, you can leave. And I was like, oh yeah, I can go somewhere else. And so that was the thought process. So that's where I took some interviews to go to a different consulting firm out in Los Angeles. Number one was really just to make sure I had some income when I got over there, but also it was a great one because you were able to get to a project, not know anything, have to figure stuff out, have to provide an answer, and like make it go. And so it was really good experience as well to be able to switch gears and be able to help people in their problems. And it's not the same problem. Like with audit, it was like, it's the audit is the audit. You're gonna do the same procedures basically every year. But here it was like, all right, you got to do this. Now you got to do that. Now you got to do this at this project. And it's totally different. And so it helped a lot. So yeah, for me, it
Mhm.
was, I wasn't scared. I think the way I grew up is like, I was always being like able to kind of take that leap and go out and, do things. And my brother actually was already out in Los Angeles. So my older brother, he's a choreographer, dancer, talent agent. And at the time, he was already out in Los Angeles, already had a presence there. So it wasn't as hard of a transition either because it just went with him at first, and then you know ventured out on my own.
So you mentioned at the top of the episode that you did that carve out project for 21st Century Fox, where you had to pull out 16 entities that had never been reported on separately before. Your LinkedIn also says that you worked for Caesars, you worked on Caesars Entertainment, you worked on
Yep.
Snap.
Yep.
Uh, like, what?
Yep.
Which one of those do you want to talk about? Because I would love to hear about both. They both sound fascinating.
So, I mean, I can do a brief about both of them, but
Yeah,
Caesars was my first one coming out of audit, and it was in the financial reporting. And so it's like that was where again, literally I was just auditing these financial statements, and now I'm like, helping to, create them. And so, it was good to be able to see the other side of it. But it was a real short-term engagement, but it was a cool experience. Learn like how the other side of it worked and how financials like were, technically put together as far as the financial reporting team. Not much accounting was really there. It was just really just helping present, the financials. So that was the first project. Then I went into the Disney carve out project. Then I did a brief audit project, with an Embraer. It was like an airplane company. And so it was back to audit, but it was like the reason I did that was purely because of the money. They pay like a bonus, a surplus to, do the audit. So I was like, all right, well, I would do that. And then Snap. Yeah. So Snap, they were looking for some help in the accounting department. And I came in and helped them with that for a few months as well. So that was like one, again, a great one because it wasn't, when you think of media and entertainment, you don't necessarily think of Snapchat. You think maybe tech and everything, but I'm like, also that is kind of, included in media and entertainment. They have,
yeah.
they're creating productions, and at the time they were just kind of getting into doing those like original Snaps productions and stuff, and so it was pretty cool to be able to see that and help with the accounting at that point. But yeah, it was cool.
It's amazing how much content is now delivered by and consumed on mobile apps, right? We've got YouTube has YouTube
Hmm.
Shorts now. We've got uh, amazing quantities of content being created and consumed on TikTok and Instagram. It's they really are media empires, and I guess that's why is Snap in Santa Monica?
Yes, Snap is in,
Yeah.
yes, that's it's in Santa Monica as well.
Yeah, yeah. Well, so
Hmm.
we got to talk about Netflix. You had a role as a content
Yeah.
accountant, original series. So was
Yes.
this was a situation where you were assigned to a specific series?
So I was assigned to the way it was broken up back then. Again, I don't know how it is right now, but back then it was broken up basically by genre essentially. So I had like the drama, I did some of the comedy, and some of the young adult stuff as well. So it was that those were, and that's actually what I wanted. I wanted to. I'm a huge drama, TV guy, and so being
Mhm.
able to do the, get in and do the drama stuff, I was like, okay, this was definitely what I want. And honestly, the interview process for Netflix was something totally different. And I actually, went in for a different job just because I'm like, all right, I want to get in, I want to make it happen, but ended up in the place I actually wanted to be in. So it was pretty cool.
Mm.
And yeah, it was good. Like, I mean, and again, accounting is, at the, you got a corporate level accounting, right, where you're doing the leases and the, all the basic accounting stuff for any business. But then content accounting specifically is looking at that asset, and the liability, of creating content or purchasing content from other, individuals, and other businesses. So that's what I was responsible for, was helping to track the cost, make payments to the vendors as it related to content, recognizing the revenue, amortizing the costs over the life of the series and stuff like that. And that was my very, very big first basic, like, real in-depth understanding of entertainment accounting, which is interesting because Netflix had rewrote the rules on how to, account for entertainment accounting because the streaming model. So it was an interesting, thing to learn.
Tell me more about that because I don't remember learning about production accounting or entertainment accounting when I took my accounting courses. What well, how was it
Me
done in the
either.
past? And then how did Netflix change this?
So, I mean, it's still there, there's other studios that are still using it. And, Netflix does kind of still use some of the concepts, but the main difference is that, in a regular studio, right, you are creating an asset, so all your development costs that are going into it, paying for actors to act in it, paying for the accountants on the show to do it, the crew, casting crew, everything like that. All those costs are built up, and then the accounting team creates what's called an ultimate that is forecasting out how much revenue this particular product, this particular content is, forecasted to essentially make, right? And you usually, there's several different, methods that people use, but usually it's over a period of between like 5 to 10 years, depending on the actual, content. But what that was before streaming, right? So more times than not, when an asset was created, it was then sold, right? It was sold to a network. That network would pay a license fee, and then they would also potentially have syndication and selling it in different jurisdictions around the world. And so there was all these ways to points to make money and amortize based off of those batches of money. But with streaming, when Netflix is creating its own product and then just putting it on this platform, there is no license fee to obtain after that, right? Because they're just creating the content and then putting it on their platform, and they are earning their revenue from subscription fees. So I'm paying, let's say, $20 a month for Netflix. How do you allocate that $20 a month to the shows that I watched,
Yeah.
because technically that $20 should be, allocated across, like, all right, well, Kendale paid for, his subscription, and he watched, Squid Games. And so that's the only thing he watched. How do we allocate the full 20 to Squid Games as revenue? So I mean, obviously that process could get pretty tiring. And so what happens is, they create, again, sort of like an ultimate for their service, for their purposes, but it's a different curve that they use, and they base it off of their history of subscriber, revenue and growth, and usually the metrics that they have inside, that says, actually we should be amortizing this over a shorter period. I forget what the period is for them. I think it's around 3 years or 5 years, but don't quote me on that. But it's a
Mhm.
shorter period that they're amortizing, over, because their data is telling them that, this revenue, is, something that is, it's a lot of content, a lot of titles. And so putting it over, these specific titles is next to impossible. And so they just kind of do it over their whole library. And that's what the data tells them.
Interesting. Yeah, so in the past, studios were creating assets that they would then sell, and it was fairly simple, I suppose, to capitalize that asset and then sell it, or if you don't sell it, at least match it up to the income streams from that asset, which, like you said, include the royalties, it
Yeah,
could include license deals, that sort of thing. But when Netflix is the platform for distribution and they create these assets, allocating all the subscription revenue to these individual assets becomes a challenge because our
yep,
our subscription, we might watch a bunch of different shows, we might watch no shows. And how could you
right,
efficiently, effectively allocate revenue? It seems almost like impossible. So is it fair to say they don't
right.
even try to allocate the subscription revenue to these individual productions?
Well, I mean, there are they do have they have a lot of data, a lot of metrics. They gather that like,
Uh,
this whole separate departments, solely focused on the data piece. And so I don't remember us actually attributing any revenue to it. But again, they look at watch hours, right? They're
mhm.
looking at how many of all the total hours that are being used. Here's how much is being, sent to here. And so while I don't believe that they actually attribute that to those specific shows, because at that point it's not even really necessary, right? Because at the end of the day, you just need the financials to reflect the revenue that you have overall, not necessarily coded per show, but they
Right.
use those other metrics to understand the success of the show. And that's where, it's like, oh, this is the a top 10 most watched show, and it's always changing, it's always updating, because that's a full-time job of someone and a team that is looking at these numbers and updating based off of that activity.
Got it. So in a traditional studio, the success of the show would be determined by its, net profit or net income. But in a Netflix
Right.
situation, it's all these non-financial metrics that determine if the show is successful. And I suppose they probably compare that to the cost to produce the show, right? There's shows that are super
Yep.
cheap, and then
Yep.
there's shows like, The Queen, which I'm sure cost a fortune, right? So that's
Yep. That
that's
was
so
a big one.
fascinating.
The Crown. Yep. The big one.
I saw an article recently. Maybe you could shed some light on this for me. It was in the Hollywood Reporter, and it was about how Netflix is shelving Halle Berry's The Mothership. Did you hear about this?
No, I missed that one.
So Halle Berry, she starred in a sci-fi movie, The Mothership, that Netflix produced, and the Hollywood Reporter said that Netflix decided that they're just going to shelve the film and not release it. And it has something to do with tax
Mm.
benefits of it. So, I suppose, like, if they don't release the film, they can just write off all the costs immediately. They don't have to amortize it or something like that?
Well, yes. So yeah, if it's a so again, I didn't read the full article. I was kind of just looking right now, but from hearing what you're saying, I can definitely just speculate a bit on that. Is that when you're creating an asset, right? Those costs should be hitting your balance sheet first, right? Building
Yep.
up your content asset. And then once you actually, once Netflix actually puts it on air, at that point starts the clock of the amortization. So if they're saying that, what, we're not going to be able to, we're not going to show this, we're not going to put this out there, then, and they believe it's a dead project at that point in time, then all of that should be immediately flushed down into the to the P&L at the point in time. There's
Oh,
also a 3-year rule. Yeah, there's also a 3-year rule that, that says that, if you have an asset that you have been putting in development, and those costs that are accrued, even if you are trying to still sell it and everything like that, technically you should be pushing those costs down to the income statement at that point in time, unless you got a very, very valid reason that you believe that this is about to be, you know, um, sold or, put on the
hmm.
market.
It's interesting. Thank you for shedding light on that.
But yeah, sounds definitely like a tax thing.
Yeah. No, I mean, it makes a lot of sense now, and I was trying to figure it out before, but I guess I didn't understand that these I figured that all of the content that Netflix makes is because they, they're just streaming this on their own platforms, that it would be expensed, but they're actually capitalizing and amortizing. And so this way they can just
Correct.
accelerate that. But it's sad because, I'd love to see this movie. Unfortunately, the accounting treatment doesn't
Yeah, I
treat the
mean,
the viewer as well, or the fans well.
yeah, and honestly, I was like, if I was on the team or if I was, the regulators on that, I'm like, you're gonna have to give me a better reason as to why you're not going to be, displaying this other than just because you want the write-off.
Mm.
And so there has to be, even if it's just on paper, it has to be another reason as to why this isn't being, exploited. Because if you start doing that, then I mean, what's stopping you? What's stopping studios from doing that at any point in time? Like that's why there's rules and policies set in place for how these assets are capitalized and when you're going to write them off, when you're going to keep them on the balance sheet, so people won't be able to play with the numbers like that. Not saying that people still don't. Studios still don't do that, but at least you got to have some type of rhyme or
Yeah.
reason of what you're doing.
Well, I mean, that's where the term Hollywood accounting comes from, right?
Exactly.
So, I just learned
Exactly, and
I just learned about this term from our from like some articles about Disney and a lawsuit with folks. Could you just, for our listeners who've never encountered this term before, kind of explain this concept of Hollywood accounting? Because I love it because it shows just how creative we can be as accountants in making that bottom line number look how the studios want it to look.
Yep. So Hollywood accounting is a term that is generally used for, is more being used more in like a deceptive light, where studio accountants or studio execs are trying to, even though a film is very successful, that they're trying to make it look like it's not on paper so that they don't have to pay out certain participations to individuals or certain residuals to individuals, which are all based on, the accounting, right? So for example, if a within every contract that, actors are, going through, they get their residuals based on the SAG negotiations and everything like that. But also certain key actors and talent are also able to get participations, which is again participating in the back end of the success of the show, essentially. But with that being said, those calculations can be really complex because it's like you can get X percentage on net gross revenue after considering these particular things and who's in charge of saying what's what, like what's in the bucket and everything like that. So a lot of times, again, historically, there are some thoughts on how, hey, I forget, I have to think of the big one was like a Harry Potter or something, but where it was just like it was a huge success, but the actors are like, where our money, where our piece of the pie at? But again, they weren't getting it because, they were including the executives were including and the accountants were including costs and stuff that was kind of like borderline, you know, um,
Right.
can you really do that? In order to reduce the end all amount that, that was really owed to the talent at the time. So there's plenty of cases on it. And actually, I mentioned to you earlier that I have a podcast now that is called Hollywood Accounting. And in that podcast is really just generally just talking about like the accounting in the, in the Hollywood industry. So like music, productions and, sports and everything like that. But, I'll have a tangent series specifically looking at, some deceptive, things, some frauds that have happened in the media industry as well to kind of go behind the numbers and see that stuff. But yeah, to your point, it definitely is the, kind of the nod to how intelligent accountants and how tricky they can
Yeah.
be and
Well, it's sort we didn't
deceptive
learn about Hollywood
creatives.
accounting in school, but it reminds me of, like, the allocation of manufacturing overhead where, you take production
Hmm.
overhead, distribution overhead, marketing, and you push that down into the productions, right? To and that so that increases your costs and it lowers your profit. And then if all the contracts are written based on
Mhm.
profit, you could see how that would upset perhaps some of the lead actors who get a profit share, and then they would
Yep.
accuse the studios of,
Yep.
manipulating the numbers. My takeaway from all this is if I'm ever a if I'm ever a participant, if I ever get points on a production, it's to negotiate on top line revenue, right? Like don't if you can.
Well, you're
Yeah.
more likely not gonna get that. It's just not standard to do that. But I think the main thing really is to that point is, and sometimes obviously depending on the deal, you might not even have that much negotiating power, or more times than not, a lot of actors want to see it on the
Yeah.
front end instead of the back end. And I think
Yeah.
that's just a mindset thing, honestly. But the main thing I would say though, is just getting another accountant, having your accountant, or financial manager,
Mm.
audit these because they're open for audits, and so more times than not, you can kind of get your own representative, your own creative accountant, to go in there and say, hey, why are you guys including X, Y, and Z? Why is this being done? And let's take that out. That doesn't fit this, this definition. And so a lot of times people don't have, an accountant to do that, or don't even know that they have audit rights. A lot of times they just take what is given to them. And so there's a whole business out there for people who audit these, type of contracts and participation statements and everything like that, just to make sure that the studios aren't, kind of gaming them.
Get yourself an accountant. Audit those
Look,
financials. You have a right to do
look.
it. That's great to know. We gotta push
Yep.
that message to all the content creators, all the
Hmm.
all the creatives out there. You need a good accountant.
Look, that's my whole mission, man. That's the whole mission is, you don't like a lot of the content creators and talent that I've worked with or talked to is like they don't, certain things that we went through as, just going in through the business courses and accounting courses, it's like second nature. It's like, oh yeah, of course. Why aren't you asking about, these particular points in the contract? Why aren't you questioning X, Y, and Z? Why aren't you looking over, certain things? It's like, it's just not second nature to them. They just, it's like, all right, let's just get the deal done. Let's just move on. Let's just do this. Let's do that. And more times than not, a lot of people, a lot of, talent in general, just a lot of businesses in general, just look at accountants or the accounting function as like a call center. It's like, I don't really need to do that right now. Or, oh, I just need them for taxes. That's it. But my whole thing of how I, provide services and provide value to my clients is I am a I'm a revenue generating center for me. I'm helping you make sure you're maximizing your revenue to the most and reducing your costs, as much as possible beyond just tax savings. I was able to look into a client's contracts that was, they had with the platform that they were partnered with. And I was just like, these numbers just seem a little high to me. I'm just like, I didn't know it was wrong. I was just like,
Mhm.
it just feels wrong to me. And so I just asked them, like, can you give me how you got these numbers? And they were on auto like debit. So they were just taking the money out. And just to be, again, fair at the front, it's not like they were doing this deceptively, but these things happen where, I looked at the numbers and I started questioning. I was like, well, this looks like you're getting, this much and this much. And then looking at the contracts, like you're only supposed to get that much, and it saved the company like at least $25,000, just from doing that one, just by asking the question, like, did he do these numbers look right, checking the contracts and making sure. And so if I was brought in on the front end on that, it would have been, we wouldn't even had that problem. But it's always, it's never too late, especially if you have a good relationship with the vendor and they, again, they're not actually doing anything wrong, like intentionally, getting that remedy, on the back end and having the audit, ability is great because people get taken advantage of, especially in the media and entertainment space. Content creators, they're not business people, they're content creators.
Yeah. And you've got their back now with your own firm. You
Yep.
founded KCK CPA. You've been
Yes,
doing that
sir.
for coming up on 2 years.
So technically, like the actual organization of the thing, yes. But I've been doing like this work since I moved out here to LA. Honestly, a little bit before LA because again, my brother was a choreographer. And he was
Okay.
in the talent space as well. And so, and him and his friends were in it. And so, in between time and, when I wasn't working my full-time job, I was doing things like that. And so it was just got to a point where it was like, all right, now, I have enough clients to kind of just do this full time. And so that's where, a few years ago, did it full time, you know, going forward.
So tell me about your firm. I understand it's a small team. It's boutique. Is that a fair
Yep.
word to use? Boutique.
I mean, that's
Yeah.
cool.
It's you're focused, right? And
Yeah.
you offer a high level of service. Like, what kind of services do you offer to your clients? How do you package up what you are doing for them?
Yep. So again, initially started with Account by K&J, K&J Strategic Financial, which is a firm that me and my wife at the time had like created. And she's also CPA. And but it was really me kind of like pushing like, hey, I want to start a firm, let's do this together and everything like that. So honestly, I kind of, pushed her into it. But we started it there and it was to help, small businesses at first. So we were just looking at small businesses, but then as I kind of more went into it, I just knew that, people were telling me all the time, it's like, you need to niche down, you need to find your market and do that. And, when you first start a business, you want to just get as much as possible, right? You want to just, let me get over all this stuff. Let me secure the bag, let me do all this. And so that was the main thing at the beginning. But over time, as I started, you're really getting further into the industry, KCPA was again crafted to be able to do that focus. I realized like, what, okay, um, I really truly have a passion and, and a mindset to do this right. And this is what's providing me the most value because the other one is like, the doing the, bookkeeping and taxes and stuff like that. It's like, that's just real, commonplace stuff. I'm like, all right, you don't need, me to do that, honestly. And so for me, I was like, let me figure out a way where I can provide true value. And that's where, again, KCPA, providing business management, financial management services for those in the media space. I also have studio clients as well, helping them with their accounting. But I negotiate contracts for people. I make sure to, strategize. Also call myself like a financial architect of sorts, and that's a connection back to when I first started, in architecture. So I can't draw, but I can definitely create, streams of revenue. But yeah, so I help with, talent to see the bigger picture, and be able to monetize and, take advantage of the opportunities that come up, strategize. I'm a huge strategist when it comes to, a lot of the people that I work with. And, just kind of taking like, and I understand the media industry. I have a creative mind, but I'm also, very much grounded and rooted in financial literacy and management. And so, I really like to think of myself with KCPA is, I'm not necessarily, even though I'm not the person who's, creating your business. Like I'm not creating your LLC, I'm not, again, I'm not necessarily just filing your tax. You're not just kind of stopping with me at one time a year with taxes and everything like that. Like honestly, you might as well just find somebody else to do that stuff. But if you want to have to really elevate and scale your business and scale what you're doing and take it to that very next level and continue to grow and to figure out how do you squeeze every last drop of lemon juice out the lemon type thing. It's just like that's where I come in and help get that to that next level. And then obviously, if I'm doing that for you, then I'll do the taxes and I'll make sure I have a team that again will help with, putting together LLCs and stuff like that. But if you're just starting, I'm probably not the best for you. You need to, again, I can give you some advice and help you out, but I'm more of the person you come to and it's like, look, I've done very well or I'm doing really good on my own. Now I'm getting to a point where I feel like I'm missing out on stuff or it's getting too hard to do this alone. and I really need help getting to that next level.
Mm. It sounds like you've got it really figured out, like exactly the kind of client that you want to serve. And I'm curious, how do you price these kind of engagements? Because it sounds like there could be a lot going on with these clients who are like doing
Yep.
well. They've got more than they can handle. And I know for a lot of CPAs that ends up being like the reason that they struggle to do fixed pricing and they revert to hourly pricing. How are you pricing your services? Are you doing it hourly? Are you doing fixed fees? Are you doing value pricing? Is it something else?
It's It's a combination of everything, because that's a good point, is that when I first, started in it, I didn't really like the thought of the hourly pricing because I didn't want my clients to feel like they on the clock. They can't like ask me questions because this isn't, accruing some more money. But I now, after, years of doing it, just want a flat fee. I understand that the hourly pricing helps, me, the professional, to be able to manage time properly, especially as we scale. So it's honestly a mix. I think now, I charge hourly for certain engagements like studios and stuff like that, that may make more sense for them. But then for, some creators, again, and some other clients, I do more of a flat fee, but this flat fee is a lot higher than the other, like in the past were, to basically incorporate a lot more stuff. In some cases also percentages, again, if I'm bringing in deals, and I'm landing them, and same way as any other talent manager or business manager would get percentages on.
Mm.
And so I'm not gonna lie, I'm not the price guru. And honestly, more times than not, I try to provide value first before I'm like, oh yeah, is this much? And that's not the most sustainable business model. But it's just like, for me, it's just like I really just want to prove to you, like, look, I got your back. We in this. And so like it don't matter how much I charge, you're gonna want me on the team because I'm bringing you in more money at the end of the day. And so for me, yeah, it's been from very low flat fees to hourly fees to how much I can bring back for you, a percentage of that. So just it varies honestly on different types of services. No, I'm saying I don't know if that was the best answer, but
Oh,
it's
yeah.
a range.
No, I think that's great. I mean, there is no one answer, right? Um, that's what I've found, and it's often a mix. I did fixed fees with my practice, but we also had some hourly clients too. So I think that's
Mhm.
fair. Um, so for our listeners who are interested in specializing in like the kind of work that you do, entertainment,
Mhm.
media, we talked about how you don't really learn that in school. Do you have any recommendations for how they could get this knowledge or areas they should focus on in accounting while they're students?
Yep. So, I mean, if you're a student, I think that if you truly understand like cost accounting, inventory accounting, then it'll be a pretty easy, transfer over into, media entertainment accounting. Because again, like you mentioned, again, it's all about like allocations and build up of an asset and, everything like that. So I say, if you're a student and you're just trying to kind of learn what's in, what they have, then that's one thing. I am actually on a mission to, to bring more entertainment and more, newer alternative ways of accounting into college curriculums, as well. So I'm on the board of Cal CPA, out here, and I'm also the president of NABA, the NABA chapter of Los Angeles. And so I'm not saying it's easy, but I'm trying to make some change, in how that is, done. But I also, among me and then some other people too, other sources out there, you can just, if you're a continuing professional, you want CPE, or even if you're just eager, there's programs out there that teaches you how to do production accounting. There's not as many out there that do like corporate entertainment ultimate accounting, but there's quite a few out there that does like production accounting, which is, when you're an accountant on the set of a particular show. And so, there's again different things out there that you can learn from, and obviously the best thing in my opinion is to get in the experience. But I have courses. I'm certified with as a CPE sponsor with NASBA to be able to give out CPEs for the courses that I create. And so I have a course as it relates to, ultimate accounting, a course on, I do crypto as well. It was important to know about crypto, to be the best, advocate for the client, since in my opinion, crypto, blockchain, NFTs, they're very closely associated with, the entertainment space, with artists, royalties and gaming, and open world universes and everything like that. And so I teach those type of courses where, again, you can also get CPE if you're a professional and you want that as well. But there's literally, you can just, I would always say Google it. You can Google out there and see what things exist. Stick to listening to, sources and podcasts like this that opens up your mind and allows you to, see the different areas. You can obviously just go into the FASB itself and look at the accounting and how it's done. You could do that, or again, you could just have guys like me who explain it to
Yeah.
you. So either one is, it just really depends on, what your avenue is.
How did you get into the crypto accounting space? I know there's crossover with NFTs and entertainment and crypto. Uh, what
Yep.
was your entree into that whole space? Like,
The sad moment, I tell you, is back in 2014, I had went to a Bitcoin like crypto like seminar. And I was like, oh, I knew at the time, like, this is the future. This is what's gonna happen. But again, that was when Bitcoin was nothing. It was when it wasn't worth much of anything. But the guy was giving out like point 0.1 of Bitcoin at the time, just for free, just for participating. So I was like, yeah, I'll take that. Thanks. And so, set up a wallet and did all that stuff and got the Bitcoin at that point in time. And, life happens. And so you just kind of forget, and it wasn't the big thing on the mind. And again, I had a one-track focus of like getting through school and getting into, doing CPA, all this good stuff. So I forgot about it until like 2017, 2018, when it made that first jump, that first huge jump. And I was like, I know I got some Bitcoin around here somewhere. And I found the account, got in there, and that point 0.01 ended up being like $280 at the time. And I was floored because I'm just like thinking of all the amount of money that I'd had. Where I could have just put $1 here, 1,000,
yeah,
at one thing, doing that, and I'd have been set. And so it was a very sick moment for me at that point in time. And I was just like, all right, I can't let that happen again. I don't want to be left in the background anymore. And so that's when I really went hard into, understanding crypto and the blockchain and everything like that. And so as I, continued to grow, and then when I really made that jump to do full time, my own, businesses, that's where again I even went even deeper and heavier into, crypto, where I was even working with the FASB and still do now, on, the pronouncements that are coming out. So the fair value, an announcement that recently just took effect. I helped in that process of getting it to the finish line. So yeah, that's my initial foray into the space. But yeah, I was in the community. I got rugged. I got, I went to the alpha sessions. I was in it. I
wow.
was like, let me be a participant of this, and really understand. So yeah.
Well, that's so cool that you've been working with FASB. What is that like? FASB seems like this mysterious, Wizard of Oz kind of organization. Like, what is it? Who are these
Yeah.
people? How do you get
I,
things done?
Look, I honestly, at the time when I was like really getting into the crypto really heavy, and I knew that they were, when I first had like, I saw like, oh, it's on the agenda now. We're going to talk about, doing some accounting for crypto. I had literally went onto the FASB website and like saw all the people in who was working on the project and sent them an email. It's like, hey, I do this. Let me know. I'm in the community. I would love to be a part of this. Cause in my mind, I'm like, this is history. This is like, this is an accounting moment, that, for CPAs to look back in the future to be like, yeah, I can say like, I was on that one back in the day. That was me in my little rocking chair.
That's right.
And so, I had reached out and I reached out several times because at first they were ignoring me. Or maybe they just didn't see it. I don't know. But Nick Capiello actually reached out to me. And he was like, hey, we're always interested to hear from stakeholders and stuff like that. So at first he sent me like a scope test essentially of like how to scope what crypto assets, what blockchain technology should be included in this first round of like, of regulation. And so, going through that process with him, talking to him about that, giving him my opinion, I'm like, well, yeah, if you're gonna go by this definition, then these things need to be pushed to the side. We shouldn't be talking about this just yet. I helped, organize, the FASB, him and his team, talk with people like companies that existed in the space, to connected them with their accountants or their teams to be able to have that conversation, because again the FASB, like you said, is this Wizard of Oz. They weren't necessarily on the ground, and
Mhm.
so I was able to say, all right, look, I'm on the ground out here, let me connect you guys with these stakeholders who this accounting is going to eventually affect. And then in those meetings, some of those companies don't know. They just given, what the actual accounting treatment should be. They just know what they do. And so it's just like, having FASB on one side, them on the other side, and then me in the middle to just kind of be able to, help that conversation along. It's like, all right, well, yeah, that makes sense here. That makes sense over here. Here's, in my opinion, where we should kind of really be going. And so just doing conversations like that with them. And again, the accounting, the pronouncement that came out is great, fair value. But honestly, that was like the low hanging fruit of crypto. Honest, to be real, it's like there's so many other complex, situations to consider that hasn't even been touched. As far as I know some of the conversations are happening, but I was even talking to Nick. I'm like, yeah, man, we got some work to do. We got a lot of stuff to talk about. Like, what happens when you create your own token? Is that inventory? Is that, should you not, like right now, people don't even show it on their balance sheet sometimes because it's like, well, it's in the contract. Yeah, I don't own it. It's in the smart contract. It's like, well, but you control the contract, don't you? Like you created it, so that's technically yours. And like you should be valuing what that crypto is worth based on how much money you put into it. And that should show on your balance sheet, because if not, it's just going to be like, is off balance sheet right now until it's used. And it's just like, I don't know. I feel like, in my personal opinion, that it should be shown. And you should recognize that you have the ability to flood the market if you wanted to with these assets, something like that. So it's just, but people have different opinions on different things, and so it's healthy to have those conversations to get those different point of views.
You're giving me Enron flashbacks with this off balance sheet discussion. I'm just actually reading the book finally, The Smartest Guys in the Room. Finally, I'm reading
Mhm.
that. Never read it before, and it's like the exact same problem that you're talking about, where they
Mhm.
had control over these other entities, but they didn't consolidate them on the balance sheet because they
Yeah.
had, some reason not to. If we don't solve this in crypto, maybe we could have that happen again.
Yeah, and honestly, and it's kind of happened already, and it's happening, right? Like when you see FTX, and the problem with FTX is that they just didn't have proper accounting. They didn't have a proper like person who really understood. And a lot of people like to say like, the regulation, it doesn't exist. So people, how can you blame people? But it's just like, yeah, sure, there isn't an abundance of regulation, but there are things like any reasonable accountant, who understands the technology and understands the business, that, all right, this is something I should be disclosing, or this is a treatment that maybe we should be doing. But I think more times than not, in the startup space in general, a lot of times is always just showing the best numbers you can to get the next investment, right? So, it's doing what you can to show, to make it look like it's working, so that you can get the next round, so that you can, put more money in it to make it actually work. And I think that, with crypto being in the startup space, in general, it just perpetuated that problem as well. And more times than not, again, the accounting in the smart startup space, for any new businesses are always lacking. And that's the biggest thing in my opinion. But yes, it's definitely possible, because it's like, well, there's no strict requirement to do it, so we don't have to do it. Either you're saving money or you're trying to mislead some people. And so, those are different ways that have happened and can still continue to happen if we don't really make this a priority.
Kendale, I just want to do a quick time check. I know we're over. Is there anything else you wanted to touch on before I wrap things up?
Um, for me, I think that AI. So obviously AI is a big one, and again, I'm on that too. I actually created. I don't know if this is the actual truth or not, but I created the first CPA GPT. And so definitely, if you guys are interested in hearing, getting to a chatbot on ChatGPT that teaches you, like, just answers your questions about basic accounting, or it's more than basic accounting, because you can train it up to like really know certain things. So I actually created a CPA one and a CFO one. So a CPA one is more client facing, asking questions and everything. Then CFO one is more professional facing. And I was like, I trained the CFO one to know the FASB inside and out, right? And the IRS inside and out. So like they're pulling
Mhm.
from those sources to be able to answer your questions and everything. And it's just a real cool way. Again, I think that we should be utilizing AI to help us as much as possible. We shouldn't be afraid of it. It's just like Excel at the end of the day. Excel made everybody's jobs easier. And it's just if you are very great at Excel, then you'll be able to, be leagues ahead of other people, professionals. And so I think the same thing works with AI, and the GPTs just scratch the surface of what you can really do.
So I'm in ChatGPT right now, and I'm on the Explore GPTs tab. And if
Hmm.
I type in Kendale King, I see the three GPTs you've created here: CFO
Hey,
GPT and CPA GPT.
yeah,
All right. That's so cool. So yeah, if you have a Chat GPT subscription, which you
yep,
should, honestly, if you're listening to this show, you should spend the $20. It's worth it.
way worth
Go
it.
check out that GPT that
Yep.
Kendall created. That's awesome. Well, hey Kendall, thank you so much for your time today. It's been so just fascinating hearing your story and learning about Hollywood accounting. And everybody go subscribe to, is the podcast called Hollywood Accounting? Is that
It
right?
is called Hollywood Accounting. Yes.
Okay. Go find it on your podcast player, Spotify, Apple Podcasts, right?
Hmm.
And subscribe. And Kendale, where do you like to connect with people online? Where should they go if they want to follow you?
LinkedIn is great, again, for professionals. And then I have a YouTube, KCKCPA, as well, as far as just like regular content, just to consume that. And then I have Instagram is probably the next best one to, like, for direct contact back and forth.
Cool. So check out
Yep.
the show notes for links to Kendale's social profiles and website. I've been speaking with Kendale King, CPA, and thanks for joining me. It's been great chatting with you, and I hope to see you around.
All right, thank you.
Thanks for listening. I hope you enjoyed this episode and that you learned something new. And if you did, wouldn't it be nice to get some CPE credit for it? Well, I've got great news. My new app, Earmark CPE, offers free NASBA-approved CPE credits for listening to podcasts, including this one. Visit earmarkcpe.com to download the app, take a short quiz, and get your CPE certificate. That's earmarkcpe.com.